Welcome to our deep dive into Fortinet, ticker symbol FTNT. In today's session, we'll dissect key financial health indicators vital for any discerning investor. We're going beyond surface-level metrics to explore Fortinet's working capital management, liquidity position, and cash flow dynamics. Understanding these aspects is crucial for evaluating a company's operational efficiency, short-term solvency, and long-term sustainability. Whether you're a seasoned investor or just starting, this analysis aims to provide a comprehensive view of Fortinet's financial robustness, offering insights that can inform your investment decisions.
Fortinet stands as a global leader in high-performance cybersecurity solutions. Their comprehensive suite of products and services, known as the Fortinet Security Fabric, provides end-to-end security across various environments, from networks, endpoints, to the cloud. They serve a diverse clientele, including enterprises, service providers, and government organizations worldwide, protecting them from ever-evolving cyber threats. This strong market position in a critical and growing industry forms the foundation of their financial performance, which we're about to examine in detail. Working capital, simply put, is the difference between current assets and current liabilities. It's a critical measure of a company's short-term financial health and operational efficiency. Positive working capital indicates that a company has sufficient liquid assets to cover its short-term obligations, signaling financial stability and operational flexibility. Conversely, negative working capital can indicate potential liquidity issues. For a fast-growing tech company like Fortinet, managing working capital effectively is paramount to sustain growth, fund ongoing operations, and seize new market opportunities without relying excessively on external financing.
Let's analyze Fortinet's specific working capital situation. Over the past few quarters, Fortinet has maintained a robust working capital position. For instance, in its latest report, the company reported a working capital of approximately $2.5 billion, representing a healthy buffer. This strong position is driven by efficient accounts receivable management, where collection periods are optimized, and strategic inventory control. Maintaining this positive trend ensures Fortinet can comfortably meet its short-term obligations, invest in research and development, and manage its supply chain effectively, supporting its ambitious growth trajectory in the competitive cybersecurity landscape.
Beyond working capital, liquidity ratios provide deeper insight into a company's ability to meet its immediate financial obligations. The current ratio, calculated as current assets divided by current liabilities, gives a general idea of short-term solvency. A ratio of 1.5x to 2.0x is generally considered healthy. The quick ratio, also known as the acid test ratio, takes it a step further by excluding inventory from current assets, providing a more conservative measure of immediate. This is particularly relevant for tech companies, where inventory might not be as liquid as other current assets. These ratios are vital for gauging Fortinet's immediate financial resilience.
Now, let's apply these ratios to Fortinet. Fortinet has consistently demonstrated a strong liquidity profile. For instance, recent reports show Fortinet's client ratio at approximately 2.1x, well above the generally accepted healthy benchmark, indicating ample short-term asset coverage. Furthermore, its quick ratio stands at around 1.8x, which is also very robust, confirming the company's ability to cover its immediate liabilities even without relying on inventory sales. These strong ratios underscore Fortinet's operational efficiency and its capacity to navigate short-term economic fluctuations or unexpected expenditures, reinforcing investor confidence.
Moving beyond static balance sheet figures, the cash flow statement offers dynamic insights into how a company generates and uses cash over a period. It's often considered a more reliable indicator of financial health than earnings, as it's less susceptible to accounting estimates. The statement is divided into three key sections: operating activities, investing activities, and financing activities. Each section tells a distinct story about where cash is coming from and where it's going, painting a comprehensive picture of Fortinet's cash management strategies and its ability to fund future growth and shareholder returns.
Operating cash flow is perhaps the most crucial component, representing the cash generated from a company's core business operations before any non-operating items. For Fortinet, a strong and consistently growing operating cash flow indicates healthy sales, efficient expense management, and effective working capital cycles.
In its most recent fiscal year, Fortinet reported an impressive operating cash flow of over $2.2 billion, showcasing its ability to generate substantial cash from its primary business activities. This robust operating cash flow provides the fuel for innovation, expansion, and potential shareholder returns, without relying on debt or equity issuance. Beyond operations, Fortinet's investing and financing cash flows reveal its strategic priorities. Investing activities reflect how the company deploys its capital, for example, acquiring new technologies, investing in property, plant, and equipment, or engaging in M&A. Fortinet has strategically invested in R&D and opportunistic acquisitions to maintain its competitive edge. Financing activities detail how Fortinet raises and repays capital, including debt issuance, share repurchases, and dividend payments. A balanced approach here, minimizing reliance on excessive debt while returning value to shareholders through share buybacks, as Fortinet has done, is key to sustainable growth.
In summary, our deep dive into Fortinet's working capital, liquidity, and cash flow paints a picture of a financially robust and well-managed company. Fortinet exhibits healthy working capital, strong liquidity ratios, and impressive operating cash flow, indicating both short-term solvency and long-term financial stability. These factors, combined with its leadership in a critical and growing cybersecurity market, suggest Fortinet is well-positioned for continued growth and shareholder value creation. While this analysis focuses on specific financial health metrics, investors should always consider a holistic view, including market trends, competitive landscape, and valuation before making any investment decisions.